My name is Ian Anderson and I'm the fund manager of the Merchant West SCI Stable P&G Fund. During the first quarter of 2023, the fund underperformed its peer group by around 2.5%. The underperformance can mainly be attributed to rand weakness, the fund's lower levels of offshore exposure, and above average exposure to listed property in South Africa. The fund has no direct offshore exposure, but does have indirect offshore exposure through several of the JSE-listed companies it owns. But relative to the peer group, that offshore exposure remains low. The rand weakened in the first quarter on the back of increased load shedding, a weaker domestic growth outlook, and the collapse of Silicon Valley Bank in the United States and Credit Suisse in Switzerland. Although policymakers appear to have averted a global banking crisis by acting quickly, central banks must now tread more carefully in their battle against inflation. It was aggressive interest rate increases and rapidly rising bond yields that sparked concerns about the health of banks in the United States and Europe. And further interest rate increases will likely put more strain on the banking system in these regions and may lead to further bank failures and a more severe global banking crisis. As a result, bond yields actually fell during the first quarter, as forecasts for the first interest rate cuts were brought forward into the fourth quarter of this year. Despite falling bond yields, listed property was the worst performing asset class in South Africa. The fund's holdings in Equitas and Storage, both of whom have significant UK exposure, were negatively impacted by falling UK property values and concerns around refinancing debt that matures over the next 6 to 12 months. Lower bond yields saw a resurgence in the prices of technology shares across the globe, and both Naspers and Prosus delivered strong returns for shareholders. The fund does not own either of these businesses because of their extremely low dividend yields and inconsistent dividend policies. The fund, as many of you will know, provides an above average income yield for South African investors saving for retirement and while they're in retirement, and invest in good quality South African and global companies that pay and grow their dividends consistently over time. The current one-year forward income yield on the fund is just below 9%, significantly higher than the longer-term average and highlighting the value on offer in South African equities, bonds and listed property securities. The fund's equity weighting of just under 40% remains high relative to the peer group, while the 20% allocation to listed property means that around 60% of the portfolio is invested in asset classes capable of producing an income stream that grows at or above inflation through time. Yet the forward income yield on the portfolio is still close to 9%. Based on our current forecast, distributions delivered by the fund are expected to grow at around 4.5% per annum over the next 3 years. That growth rate has slowed given the negative impact of higher interest rates and load shedding on economic growth. As a reminder, the fund is ideally suited for investors looking to build an income for their retirement and then to manage that income in retirement such that the major risks they'll face are mitigated and in some instances completely eradicated. Those risks are, firstly, longevity risk. We don't know how long we're going to live, and so we don't know how long our money has to last. Secondly, the sequence of returns risk. In other words, making sure that you're getting the right returns when you need them. And finally, inflation. This is the hurdle rate, and unfortunately, it grows rather than shrinks in retirement. In a payers and growers portfolio, like the Merchant West SCI Stable P&G Fund, investors can live off the income provided by the portfolio and not draw excessively against the capital. In this way, the investor's capital is preserved and is only utilized in emergencies during their retirement, irrespective of how long that retirement lasts.